We've had a very busy week. Equally, we've had a very busy month. I've only been in the office for a month. But I must say that we're very hard at work, and so far so good. I think we're in the right direction, and we worked very well with our partners, both globally and internally. I think we're on to a good wicket, to use some cricket parlance. Now, we've been able to diagnose the economic problems in Zimbabwe quite well. I've got a good team in Treasury. We've got good colleagues in government. There are a few issues that I think I should share with you that you ought to know in terms of our diagnosis. First of all, we have the issue on the external front regarding our arrears that we owe certain institutions such as the IMF, the World Bank, and the African Development Bank, and then our creditor partners in terms of countries, the so-called Paris Club. We owe them some monies, and we've got to service those debts. We're behind with arrears. So the impact of that, so that you understand, is that it is not easy for our banks to source credit lines offshore to support our industry and making the right investments so as to create jobs for our people. So this is impacting job creation and the competitiveness of our industry. That's why the solution, as we've suggested, is to come up with a credible arrears clearance strategy. We have that. The first order of business was to present the Transitional Stabilization Program, which is our economic reform program that we've just launched a couple of weeks ago. I presented that in Bali at the World Bank IMF meetings, and the global partners, all the creditor countries, including the IMF, AFDB, and World Bank, like the program, and they really endorse the program. They think it's a very good plan. So that's what we've done, and we'll be proceeding to then do further negotiations with the creditors so that we can begin to pay off those arrears, starting with the so-called preferred creditors. The African Development Bank and the World Bank will pay it first, and then as a follow-up with the Paris Club of Nations, and then negotiate with them. And of course, on the table, we've got both the HIPIC and the non-HIPIC solutions, or the HIPIC-like solutions, or ad hoc solutions, as they're sometimes called, in terms of debt restructuring. And we hope that by this time next year, we'll have made a lot of progress in restructuring that foreign debt. So that solves the issue of building up our credit lines globally. Then internally, we've also diagnosed another problem, another challenge, which is that we are living beyond our means as a government. If you take our expenditure and compare that to our revenues, which are collected through ZIMRA and other means, we find that there's a big gap, and that gap, which we refer to in economic parlance and language as deficit, the budget deficit, that is quite large. It is above 10%. That is too large by global standards. So we're desirous to shrink this budget deficit to a number that is single digit in the next 2 to 3 years. Now, let me explain then the impact of this budget deficit so you understand why we're taking some of these measures as solutions to this problem. The impact is that the government has been forced to issue treasury bills, which are really an instrument through which government borrows from institutions and from the public at a high interest rate, which is very costly. But also, because treasury bills have zero default, you always get paid by the government. You don't have to worry about any default. Institutions and individuals prefer to buy treasury bills, and banks then prefer to do that rather than lend to companies. So they then starve the private sector of much needed resources for them to invest and create jobs for Zimbabweans. So that again impacts job creation, and we have to deal with it. But also it impacts what we call monetary policy. Again, that's a big economics term, but really it impacts the value of money domestically, but also the value of money internationally. Domestically, the value of money is really about inflation. That this impacts inflation, and inflation is a cost to the population. It's like inflation is a tax to the population. But also it impacts the value of money externally in terms of the exchange rate through which we exchange our domestic money to foreign monies. Although we don't have full exchange rate policy in Zimbabwe, but notionally it also impacts the value of money externally. Now, so what have we done about that in terms of dealing with the issue of the issue that we are living beyond our means? What we've done really is the first step, which is to introduce a tax of 2% on electronic transactions. Now, this tax is meant to cover the wider population, entities, businesses. It is an inclusive tax. Now, but of course there are exemptions. We don't want any transactions below $10 to pay this tax. Neither do we want certain categories to pay tax. There are a slew of exemptions, such as, for instance, the pensioners, payments into the stock market, because we've got pensions invested in the stock market. We've got pensions invested in the money market. We're exempting that. But also any payments on salaries and to the government itself, we're not taxing that. Others, that would be double taxation. So there's a long list of exemptions that we believe should make this tax palatable. Also at 2%, it is incorrect that this tax may have caused some of the movements we have seen in the value of the currency on the parallel market. 2% is 2%. Even if it's compounded, how does it become 600%? How to move from 2% to 600%? So it's not possible that the tax caused any triggers in the parallel market. I'll explain what I think happened in terms of that market and some of the measures. Now, so the 2% really is about growing our revenues as a government. What I'll then do in the budget, because the people of Zimbabwe are going to pay this 2%, we would like government to reciprocate and meet the people of Zimbabwe halfway. That means that we have to cut expenditure, government expenditure. We have to do some serious cost containment measures, various measures, and reduce government waste so that people can see that we too are playing our part in meeting the Zimbabwe people halfway. Also, we need to show Zimbabweans how their monies are used. They must feel this 2%, but also feel the rest of the tax. I mean, they're already paying other taxes in the quality of the schools, the quality of the hospitals, simple things like, hospital beds around the country, desks in our primary schools. And I'm just mentioning those very simple things. Those are tangible things that people feel. Making sure that our roads are mended so there are no potholes. Those are things that people feel that they can touch. So we need to make sure that we really do the simple things with the tax that's collected, so that Zimbabweans feel that they're contributing, and likewise we're reciprocating. On the monetary policy front, you see, what was the problem there was like this. You have US dollars within Zimbabwe. In a sense, Zimbabwe is not short of foreign currency out there, but it is short of currency that the government can direct into priority areas such as fuel, wheat procurement, soybean procurement, and so forth. That is the issue. So there is what we call in economics disintermediation. It's a big word, but really means is that the foreign currency is bypassing the banking system. It's out there, but we're trying to bring it into the formal banking system. So we've decided to open what you call the capital account again, to use a very big word, which really means that allow for individuals to have access to their foreign currency whenever they need to. So we introduce the FCA accounts so that monies can be deposited, and then you can also begin to trust the banking system. And I urge all Zimbabweans to open up their FCA accounts and fund them. Test the system, test the banks, build confidence over time, and you must go to the bank and make sure that you can retrieve your money. If that happens, that really builds confidence. And we have said to all banks they should recapitalize to increase their capital base so that they are safer by December 2020. And they're going to do that to move their capital base to 100 billion so that Zimbabweans feel secure that their money is safe. But of course, as we introduce these reforms, opening up and so forth, we want to make sure that the process is orderly. Chaos is not helpful for any introduction of policies that will move us to the next level as a country. That's why we are guaranteeing this one-on-one convertibility between the RTGS balances and the hard FCA accounts in US dollars, to make sure that we preserve value. We have an orderly introduction of these FCA accounts, the opening up, so that people don't lose value. We are guaranteeing that through the structures we've put in place in terms of foreign credit lines. But of course, I'm aware that certain individuals are happy to operate in the parallel market where rates are worse than the one-on-one that I've just pronounced. But of course, it's their choice. Through the mechanism we've put in place, they could get better value, but they choose to operate on the other market. But it is indeed their choice. And looking at other areas, we're also keen to make sure that our parastatals don't continue to be a drain on government, to be a drain on the fiscus. They begin to play their part in contributing to the growth of the economic cake. So we'll be privatizing, and there are about 11 parastatals that are due for privatization, and we'll be moving as quickly as we can to privatize them, so that they solicit, suitors from abroad, locally. And as we privatize, it's important that the diaspora are also included. They're given an opportunity to buy shares. Locals, those who are here locally, are also included. And one mechanism for doing this is by making sure that these transactions, or rather these companies, are also listed on the Zimbabwe Stock Exchange. So that way we also deepen the quality of the market, the size of the market. That is a good thing. Imagine if all of them were listed on the Zimbabwe Stock Exchange over the next 2 to 3 years. That would be phenomenal. That would be actually wonderful for the growth of that capital market. Now, there's been fears, by the way, that maybe there's an intention to tax diaspora remittances. Absolutely not. Diaspora remittances, in fact, are a savior for this country. We're getting inflows. These diaspora individuals are supporting their families directly, and it is complementing some of the aid we're getting from outside. This is a very helpful source of resources for Zimbabwe, and really we should not tax it. We should be so grateful for the diaspora for sending us these resources and to their families. So that was that, and then I was mentioned about privatization. There's another area. We'll continue to support agriculture. Right now we'll build strategic reserves around grain, and we hear that El Nino is on the way. So at least we've got some insurance now. We'll continue to crowd in the private sector in a sustainable way to make sure they continue to fund the private sector working with government. Our banking sector does that. The corporates who do that, I'm thinking here of the oil expressors, for example, who could also be involved in contract farming for soybeans. So we want to make sure that agriculture continues to support our nation. 65% of Zimbabweans live on the land, after all. But also we want to make sure that we support the mining sector. It is also the high growth sector as far as the economy is concerned. I'm seeing growth rates of the order of 26% as a sector. So it's a high contributor to the economy. We want to support it, support the gold miners. We're thinking of establishing yet another gold facility and equity fund. There's also beneficiation plans that are in place on the lithium front, fertilizer front, from coal and methane. There's just so many opportunities in the mining sector. It's remarkable. And yet Zimbabwe is underexplored, so we need to invest more in just exploration so the resources are down there, are well understood, there's enough information, and then further mining can continue to take place, but make sure that there's also beneficiation taking place to get better value for our minerals. In industry, of course, we want to make sure that industry starts creating jobs again rather than losing jobs. So supporting the retooling of companies. We're working on that to make sure that maybe we set up a venture fund that industrialists can source monies from in terms of equity to complement the credit they're getting from the banks and be able to retool. But also this fund would support startups, those who have new ideas and are willing to try them out, but are looking for capital, risk capital as it's sometimes called, and want to make sure that they are also supported in this way. So I could go on, but there's a lot of things that we're working on, and I mean, it's not just myself as Minister of Finance. I monitor progress on the Transitional Stabilization Program as an orchestrator, but also playing my part, but other departments are playing their parts as well. One thing that Zimbabweans should know is that devolution is going to be implemented, at least in terms of budgeting. So 5% of the budget is going to go towards that. So we also want to make sure that these resources are used effectively to improve the lives of people out in the provinces and in the various districts. So it's important that we build the capacity of officials down there to manage these monies and account for them. And also we should use proper mechanism to disperse the funds, being reflective of the levels of poverty right across different regions of Zimbabwe. Yes. As an accompaniment to some of the measures we have taken, but also in the way the measures have managed to reveal more information about the underlying problems that the economy is facing, which likely is the case, really, that the measures are revealing the underlying problems. Certain shortages have become to emerge, such as the shortage of fuel, for example, which really is reflective of the fact that we are a guzzler of our forex. We don't have enough foreign currency in terms of supply, so we are always raising credit lines and allocating from one sector to another, or rather from other sectors, and this is impacting fuel supply with queues. But I'm confident that in the next few weeks these queues will dwindle as more supply comes through. I must say that this week we've had in the last few days at least a good supply on the petrol front, but not so on diesel, and we've allocated additional funds for the procurement of diesel. If you look at the shops, what happened in the shops really was a reaction to movement in rates in the power market, where people took against speculative positions that if they're acquiring the US dollars at a high exchange rate, then that would be reflected in the prices that are then sold on the shelves to reflect the cost of acquisition of the dollars. But also, it's also anticipatory, speculative, in the sense that it was also anticipating future movements in rates, so people start building that up into the pricing, and then prices shoot up. But then let me say this, that I mean, the risk with that then it means that in terms of dealing with that those price hikes, we may have to reconsider some of the import protection that we've put in place, so that then we can have more supply coming through from outside the borders. Because if you go onto any shelf for goods in a shop, easily 80%, if not more, of the goods are imported. So clearly, we're already a high importing in terms of country, in terms of goods. So we might as well open up. I'm not saying that we will open up. I'm saying that it's one of the options. If the prices continue to escalate, we have to take action. But also, just to urge, the retailers that they shouldn't speculate in this way. It is hurting everyone. High prices hurt everyone, including them, because the moment you have high prices, high margins, and so forth, workers also put pressure. They want higher wages. Suddenly, we are being faced with managing your workers under stressful conditions, high inflation, high wages, and then it spirals out of control. So everyone should heed that and make sure that they stay within the limits of what we've said about convertibility, and not follow the parallel market rates. And those operating in the parallel market is really to say, look, desist from illicit activities. Some of you will be so unfortunate and you will face the long arm of the law. I don't think you want to be on the wrong side of the law. Thank you.